This is your market recap for August 19th, 2025. Today we played pretty bearish. Yesterday let us know with its small closure that we were and could be expecting a big expansion day, and that is exactly what we got today. So starting on the daily time frame, we can see here we have this fair value gap, right? This daily fair value gap. We can see that it got reacted off of here. I played bullish, so that validates it. And then yesterday we closed below it. And so today we were expecting some sort of draw up into it before seeking other draws on liquidity, being this low on the 4-hour or this daily fair value gap, which seems like it was. Now, if we grade this whole range, we have equilibrium at 428.75. And if you look right there, that's that line. And then the low of this is 425.25. So, I mean, 3 handles on the daily time frame for equilibrium is pretty good as far as an equilibrium retrace goes. Now, down to the 1-hour. We can see here, this was yesterday's spike back up into that daily, what am I trying to say? Inverse fair value gap. We get up, so it's that high. Yeah. Market opened here yesterday, or I guess that would be today. Today's daily candle opened here. We ran up into this inverse fair value gap, took out this high. Again, as always, didn't close above it, so that tells us we're looking to play bearish from there. We then come down, have this SMT, right, which then pushes us back up. Could have reversed us fully, but price reacted off of this hourly fair value gap right there really nicely. So we displaced lower. This tells us that our draw, that since this pushed us up, but this rejected us, that tells us that our draw is at least this low, if not lower. So we once again come down. I believe this was another no, that wasn't, sorry. Getting my days mixed up. So we had this low here, came back up, another hourly fair value gap. From there we expand. Large expansionary candles downwards. 4-hour here trips us up. That was the macro move. Hit a nice little retrace there. And then continue to expand downwards. This is a low over here. Then obviously that daily fair value gap here. Price just wicked below equilibrium. And we seem to be going and rounding ourselves out from there. 15-minute time frame. Pretty much the same. Took this high, retrace, SMT up, hourly fair value gap down, retrace, hourly fair value gap down. Market opens. Sorry, we drag up into this 15-minute. Market opens. So what does that tell us? If we know our higher time frame draw is at least this low, and we're drawing upwards right before market opens, it's a fair assumption to assume that price is going to come at least take out this low, if not lower, right? And that's where the super daily time frame comes in, or super high time frame, the daily, comes in with our low here, and then this daily fair value gap. So with that, we come here. You can see the macro here reversed us, or retraced us up into this 15-minute right there. Another expansion below this low. London closed, give us a little bit of a retrace here, but it shows how heavy we are. That as soon as lunch starts, we take another dive here, touching the bottom of this. And I wasn't even looking to trade PM session because in my mind we had already hit our target. One could have traded this down to equilibrium, but I wasn't certain. This is already a big move. I didn't feel certain that we would get a significant move in PM session with the volume we had AM session. Now in the 5-minute, there's really not much. Yeah, not much. Kind of just the 15-minute, just smaller time frame. Nothing really reacted on this time frame. So skip it, go to the 1-minute. Again, SMT here, push us up, hourly fair value gap down, hourly fair value gap down. Draws this, we're drawing back up. Market opens, we tank all the way down to this low, this 4-hour. We had a high time frame SMT of these lows. lower time from SMT. I entered here. My break even was here. So I got stopped at a break even when we came back here. Had another higher time frame, or like 5-minute SMT here. Entered this one as well, but unfortunately I got wicked out by like 2 handles or something on the sell side before it went up to break even. Wouldn't have even hit my first profit. So my bias was wrong today. I think I noticed we were in the bearish trend. I just didn't really want to see it because I'd love to call a bottom, right? So I have devised a new routine to get my bias when I sit down on the chart. And I'll go through it at the end of this video. But again, macro as well pushed us up. Had an SMT there, got broken, of course. And then we came up, failed to take out this high. ES was like rocking pretty high. So SMT here was actually an SMT with this high all the way up here. But that would kind of be an ugly line, just cutting through all these, so I just put it there. With then a lower time from SMT right there. So this is probably trade of the day right here. Somewhere in here is a change in the state of delivery. I believe it looks like it may be somewhere here. So that would be your stop, would be up here. And then you target, obviously, this low. And then that higher time frame draw of this, at least. If you want it to be a little risky, you could push it all the way down here. Or, no, I don't like this. I don't like this rejection, I would say. Or you could just drag it down as it continues to go down, but I don't like this rejection candle there. And like I said, from there, daily for VAGAP, nice closure here, taps off of it, comes up, SMT, lunge pushes us down again. Algorithms about to start here, so we come up, take out this high, again, barely. Thought this was an SMT. What did I draw it on? I must have drew it on ES. This right here is an SMT, so that would have been the PM session trade. Changing the state of delivery. Unfortunately, I believe that would have been, it might actually have been too fast for us to catch anything. We would have caught this. But 1 to 2 is there. It would have been out at profit 1 and then break even. So you can see here, we perfectly touched equilibrium, hung around it for a little bit, and then came back up off of it, and now we're going horizontal. I think we're going to continue bullish from now on the rest of the week. So yeah, looking higher time frame. Like I said, I think we're going to play bullish from here on out. Monday, Tuesday bearish, Wednesday, Thursday, Friday to reach, or to try to reach all-time highs is what I'm looking for. Nice closure within this. Again, nice touch off equilibrium. Really like how we're rounding here after touching equilibrium. But we could continue lower. It depends how high time frame of a retrace we're going. This is just the last draw besides this. And I'm holding that we are still really high time frame bullish. So now, I mentioned that I was going to talk about my new routine when I sit at the charts to get my bias. So on each time frame, daily, hourly, 15, 5, and 1 minute, I will be looking at specific things. Daily time frame, I need that higher time frame trend and any draws on liquidity. So that would be higher time frame on the daily time frame, we're bullish, right? So why we'd want to know we're high time frame bullish, even if we're bearish today, is so that we don't target things like this. If we know we're high time frame bullish on the daily time frame, seeking anything past equilibrium would be irrational. So it limits our draws on liquidity is what that does. So then I actually go down to the 4-hour time frame and do the same thing, except more recent. Where are we going from here? All right, downtrend. We just disrespected, oops, that's just not right. We disrespected this fair value gap right here. And so below that, the only draw we have is this low, right? So if we think about draw on liquidity, this one's been disrespected, so get rid of it. Our next draw is here. So with that in mind, so trend, draw on liquidity, down to the hourly time frame. Same thing. Trend, draw on liquidity. All right, we have trend here. That's where you see this SMT pushing us up. We see this draw here. Nice reaction here. What does that leave? A draw here. So we have draw on liquidity here, here, and here. All right, so trend, draw on liquidity on the daily, 4-hour, and hourly. Then we get down to the 15-minute. This is where we start looking closer to what the market has done since pre-market opened. Again, we see this hourly rejection here, retrace up, hourly rejection here. We also look at the behavior of price. We see we're moving pretty well. We're not super consolidating around here. We had this little bit here, but that just took us up to this hourly where we then expanded lower. So we can expect an expansion. And like I said, if we know this is our draw on liquidity, right, on the hourly time frame, but we're drawing upwards into this 15-minute fair value gap, that's the draw on the 15-minute is this bullish fair value gap. But we still have that higher time frame draw down here. So we can use that down to the 5-minute. Can tell behavior more the lower time frame you go. Right, nice. You can see consolidation here, rejection off this hourly, nice expansion downwards. And then us drawing back up in, kind of like reloading before we shoot out the gate for market open. And then same thing with the 1-minute. Take out these lows, barely, right? We take out these lows and kind of consolidate. What does that tell us? Most likely our draw is this and that 15-minute fair value gap. But higher time frames telling us this is our draw. So we can take this short to there. And then our 4-hour is telling us our draw is this. So you can take it down to there as well. So it's really all about getting the trend and then the draw on each time frame, because that it all fits together like puzzle pieces. Daily time frame, we're bullish, so we know we shouldn't expect too crazy of a downside move. We also have that fair value gap and equilibrium as the draw on liquidity. Then the 4-hour, we have that lower time frame trend taking us downwards, disrespecting that bullish fair value gap, and then having that draw on liquidity be this low down here. Then we go down to the hourly time frame. We can see we have a couple or an SMT on the sell side forcing us upwards, where we then got rid of that SMT by reacting off of a hourly fair value gap, which then brought us this draw on liquidity right there. And then the 15-minute, we saw more in depth the rejection off both of these. We saw this consolidation and then this expansion here. So we know the type of price to be expected. Same thing with the 5-minute and the 1-minute, right? If you piece all those together, 15-minute tells us we're going to retrace up to this 15-minute and then expect out the gate to shoot lower towards that higher time frame hourly and 4-hour and daily liquidity. So it all fits together like a big puzzle. So we'll see if it actually works. I just came up with that because today was a huge day and I feel kind of stupid for missing out on it. But you know what happens, you got to learn somehow. So this has been your market recap for August 19th, 2025.